reached out to me and said I should come, and then I looked at how many Bitcoiners were getting.
Hey, Stats fans, welcome back to Swan Signal Live. I'm your host, Brady Swenson. I'm joined today by two legends with the same last name, Pierre and Morgen Rochard. And I'm very excited to dig in to some Bitcoin and financial advising and some history and just general chat, catch up with these two great Bitcoiners. But first, I've got to pitch to you the Pacific Bitcoin Conference. All right, this is a conference that Swan is organizing in LA, Santa Monica in particular, November 10th and 11th. Both of our guests today, Pierre and Morgen, will be there, as well as Michael Saylor, which we just announced yesterday. Saylor is flying in from Miami to be with us all week at the conference, doing different kinds of events and meetings and dinners, parties, and of course to speak on the hard money stage at the Pacific Bitcoin Conference. So the conference is just a number go up. Things are getting really exciting as we continue to plan and really nail down the details. Amazing sponsors coming in, incredible lineup of speakers, and it's really fun things going on. This is going to bring a lot of energy. We're really dedicating a good portion of this conference to the Bitcoin community, an ode to Bitcoin Twitter, if you will. Let's go hang out with all of our friends, play the music that we love, comedy, memes, pitch competitions, trivia. We got a great basketball court with an incredible performers out there. So we're going to do things a little bit different at this conference and have a little bit of a different feel. It's just for us. Let's celebrate being Bitcoiners at this time in Bitcoin's history, where things are still relatively early, but we see the narrative that we've been talking about playing out for years now and beyond. Bitcoiners, Austrian economists, earlier calling all of this stuff happening, and eventually it has. And fortunately now we have something to sort of save us, a safety net of sorts, from the sort of culmination, I guess, of all of these predictions from Austrian economists. And we have a perfect pair to talk about these ideas with us today in Pierre and Morgen. So let's bring them up here with us today. Hello, how's it going?
It's going very well. How are you, Brady?
I'm great.
Yeah, we're doing
I'm excited.
Happy
How
to
are
be
you,
here.
Morgen?
Yeah,
Good.
doing really well. Thanks.
Awesome. Great to have both of you here. Pierre is now at Riot. He is VP of Research. And Morgen runs her own business as a personal financial advisor. And so let's actually kick it off with you, Morgen, because this is right up your wheelhouse. Swan recently launched Swan Advisor Services, which is a platform for financial advisors to manage Bitcoin investments on behalf of their clients. And I know that you sort of consulted with Andy and others on the team while this product was being built. So you have kind of a backstage view into that process. But when it comes to, being a financial advisor and being in the industry, what is the sort of level of understanding of Bitcoin among financial advisors in the industry? And, what kind of impact do you think a product like this might have on Bitcoin?
Yeah, it's a great question. I would say that in the past, the level of understanding has been very low and almost non-existent. I think that over time, as Bitcoin has continued to persist, as it has gone up and down in value, as it has gone up in value consistently over time, despite its pullbacks, that it has become more interesting to advisors for sure. And they feel like they do need to at least be involved enough so that they can field client questions. The most recent switch that we've seen, I guess, towards the last bull run was really advisors getting away from Bitcoin, sort of jumping from no coiner to S coiner, I would say is what happened quite a bit. And I think that now that some of that stuff is getting washed out of the market, thankfully, that advisors really do now have the opportunity to come back to what's important, which is helping their clients hold sound money.
And, we're driving forward education for financial advisors with the Bitcoin for Advisors podcast, where Morgen is the host and I'm the guest and
assistant to the host.
Assistant to the host.
I love it. So you're a Bitcoin family. Both of you are Bitcoiners. Tell me a little bit about the history Pierre, did you bring Bitcoin to Morgan? Did you bring Austrian economics to Morgan? Vice versa? How did your guys' sort of mutual belief in Bitcoin and understanding of Bitcoin come together?
I would say Rothbard brought us together, right?
That's right. The famous Austrian economist Murray Rothbard, and really, I mean, we have similar, I guess, parenting philosophies with our parents. Our parents are kind of similar, and so that's why we get along so well as a couple. I think, on top of kind of just the politics and the economics angle. I think that I was more interested in it at first, and then I persuaded you, or I wore you down, depending on one's perspective. But now you're leading the charge. Now I feel like you're
I'm more interested in Bitcoin than you are.
I think that you are more effective sometimes at communicating about Bitcoin and with normies.
Well, thank you. I think I have background in doing so, right? Like you, and I kind of liked how you described this when we were at Surf and Bitcoin. You were talking about where you typically talk to people in the funnel of getting people from no coiner to becoming Bitcoiner. And you're sort of in the middle of the funnel where you're talking to people who are already pretty interested in it and just need that last push to sort of get over the hump and really truly become a Bitcoiner. Whereas in my practice, I tend to deal with a lot of people who have never heard of it before or have heard of it, but have only heard bad things about it, and trying to get them from there to realize that they need this as part of an essential portion of their financial plan.
So obviously not everyone on the planet is going to follow Pierre into that middle of the funnel. And many of us are creating content sort of for that.
Completely disagree, but go on.
Level of Bitcoiner, right? So, okay, well, that's true. I guess I shouldn't just throw away that premise. But in any case,
we all get to the middle eventually, right?
What? Yeah.
I mean, it's like I
but
think everyone's going to get on the internet, right? And then eventually one day, everyone will no longer use phone numbers. I hope, but like there's a migration where eventually, we're not going to use fiat anymore, and that's the future I see, or the vision I have for Bitcoin.
Yeah. So the question is, there's I think an important role to play in one, just adoption, just getting people to use Bitcoin, and that's good enough, and that's the way, because the people will follow, and that's the way the world is now, and the money people are using, and so you're just forced to follow along and become a quote unquote Bitcoiner in the most basic sense of the word. But Pierre, like, how important do you think it is for a critical mass, and if you had to guess, what might that critical mass be of people to really understand what's happening here? Are we at risk of sort of losing if we don't have a critical mass of true Bitcoiners, I guess you could say?
Yeah, that's an interesting question, because if we look at the car, for example, not everyone understands how an internal combustion engine works. And so at a granular level, I'd say, hey, not everyone needs to understand how Bitcoin inputs and outputs work. On the other hand, everyone understands the difference between 85, 90, 95 grade gasoline when they're at the gas station, even though that's a very technical concept, right? That and that's something that is very error prone. I myself have accidentally filled the wrong tank of gas into my car, and then that's a huge problem. So here we are in the year 2022, I think we are.
Yeah, we're
and that's still a thing. You go to the gas station and you have to choose between 4 different grades of gasoline or diesel. So I think there's parts of the Bitcoin system where we're never going to get away from that complexity or the user unfriendliness of it. And you can see that across different products that we use today. So on the other hand, there are other parts where they're going to get increasingly reliable. So hopefully people don't have to perform engine maintenance every time that they want to drive their car. And that's, I think, part of, improving Bitcoin, so that you don't have to worry about, is my Lightning wallet going to have the right number of channels open, or kind of questions like that. But I don't think we know yet what the different categories are, or where things are going to fall exactly on the spectrum of how much do we have to know in order to correctly use the technology versus how much will be abstracted away and hidden by developers innovating.
I agree with that. I was thinking more along the lines of, I mean, that's a really important part of it as well, but more along the lines of like inoculation against ideological warfare, basically. Like these ideas that are being thrown around, misinformation from massive megaphones. We know what to expect. We're seeing it happen right now. We know the energy FUD is going to be a huge part of it with ESG, narrative foundation already laid. That'll be easy to leverage, et cetera. But we need people to understand that this stuff is misinformation. And I feel like there is a risk of, losing or setting back at least Bitcoin adoption significantly if we don't win hearts and minds of a critical mass.
Yeah, absolutely. And going back to the car analogy, it's actually very apt because I think today people have forgotten the value that they get from carbon emissions, as they're called now. So there is, I think, a continuous risk of people forgetting what the fundamentals of Bitcoin are, and then trying out different systems and getting wrecked, and then learning the hard way over and over. And so I think the value of having people fully understand the system is in order to help them avoid learning the hard way. So it's really about how do we learn the easy way, and that I think is about minimizing waste, literally, because it is wasteful when people learn the hard way. They consume and destroy real capital. And so that's where I think that education is important. But everyone's going to learn. They just got to decide whether they do it the easy way or the hard way.
Yeah. So Morgan, you've talked to clients, I assume, about Bitcoin, and friends and family outside of, our Bitcoin echo chamber. With this, with the benefit of having this sort of knowledge of the Bitcoin echo chamber. So it's kind of a foot on both sides, which is interesting. So when you're kind of out in the normie world, do you see or run into any, what are the biggest pieces of misinformation that seem prevalent that get raised to you, and how do you address them?
Yeah, I would say the number one detractor for people actually putting this in their portfolio, after we discuss, all of kind of the basic, is the government going to ban it? And it's, it's only used for drugs, like those sort of easy ones that you can knock out. It's really the volatility that holds people back, I would say. Risk tolerance is not something that people can really take lightly. Like it's either something you either have a stomach for it or you don't. And typically people have a stomach for risk when the price is going up. Right. But a lot of people don't have the stomach for risk when the price is going down. And people who have that stomach for risk might think they have it even before they know whether or not they have it, because they haven't been through an 80% drop in their market portfolio. So I would say that's something that it's hard to overcome for sure. And it's hard to overcome even I think in the Bitcoin world. I mean, it's one of the reasons why they FOMO in, right, and then they FUD out. And why we see such volatile movements in Bitcoin, it's because I don't think a lot of it does, like risk tolerance does decisions about how they're going to hold it and how long and where and when and all those other factors. In my client base, I would say the number one reason why a client either holds a small position or doesn't hold any Bitcoin at all is because of volatility.
Okay, well, that was a nice little tangent, but I want to get back to talking just a little bit more about financial advisors. So there's sort of this tried and true framework, I guess, of advice of a 60-40 portfolio where you diversify between stocks and bonds. But the last couple of years, we've seen both get slaughtered, obviously, so that kind of balance didn't help too much. So in a stagflationary environment, like we find ourselves in today, likely, both of these asset classes fall together. So how can investors diversify in an environment like this? Like, what do you do now?
Yeah. So, I mean, I would say for the average investor, it's still like looking at your portfolio as a whole, right? There's going to be some people out there, right? Diehard Bitcoiners who are listening maybe to a show like this, who are happy to be 100% in Bitcoin and they have no problem with that. There's going to be other people who, in order to get their feet wet, right? They take a 1% position. And then they can decide whether or not they want to take a 1% position from the stocks bucket, which is typically the riskier bucket, as we would call it, or from their bonds bucket. I mean, I tend to deal with a younger client base, so we're not really mostly not in 60-40 style portfolios. And if we are in a lot of bonds, we're really trying to match what's called your future liability or future cash flow with your asset of today. So it's a concept called asset liability matching, whereby if you know you're going to have a large expense in the next 1, 3, 5 years, that you try to match that up with some sort of short-term asset, like a bond, like putting cash into a cash savings account and so forth. I wouldn't consider Bitcoin to be a short-term asset, right? We consider it to be long-term savings. So it's not really a good asset to use for a house that you're going to purchase in 1 year, or if your child is, turning 18 and you're sending them to college, right? You're not going to be able to match that asset with the liability in such a short period of time, right? Because if, let's say, you bought Bitcoin at $70,000 a coin and now you're going to go buy your house, right? Theoretically, in this situation, you have 60% less purchasing power, right? So what I would say is that you want to match long-term savings, long-term goals with holding something like Bitcoin or stocks in your portfolio, and holding short-term things like cash and also bonds for any short-term goals that you may have. So when you're thinking about your total asset allocation, you have to include your risk tolerance in that. But if you know that something is long-term money, then it's much easier for you to wrap your head around the fact that there's volatility involved. And even in any environment, really, whether it's a stagflationary environment or growth environment or whatever it is, that you can take on the appropriate amount of risk given your specific financial situation.
So one thing that we've seen over the past, that was a great answer. So one thing we've seen over the past, like a couple of months, I guess, at Swan, is we've started executing tax loss harvesting transactions for clients. I was wondering if you might be willing to just describe what that is. What is tax loss harvesting, and why it might be particularly useful to Bitcoiners given the nature of the asset?
Yeah, sure. So in the standard asset world, tax loss harvesting means that you have a paper loss. So let's just say you bought a stock and for $2,000 and it went down 50%, and now you have $1,000 paper loss that you haven't taken yet, and you have $1,000 left of the asset. What you could do is you could sell that asset, realize that $1,000 loss, and then go invest in something similar side by side with that asset. And now you still maintain exposure to the market in some capacity, but you're no longer holding that asset, and you can now use that $1,000 loss against your taxes. You're allowed to deduct up to $3,000 per year that you take losses. Let's say, for instance, in that example that I just gave, let's say you took a $6,000 loss instead of a $1,000 loss. You would deduct $3,000 on your current tax return, and then you can carry that loss forward to future years. If you had no gains in the next year, you would then use another $3,000 in the next year and deduct that on your tax return, and then that loss would be completely gone. In the Bitcoin world, it's a little bit different. So in the standard asset world, you can do that, and you can sell an asset and invest in something similar. If you wanted to reinvest back into that specific asset, then you have to wait 30 days. So they are trying to get rid of this rule for Bitcoin, whereby you can't just trade in and out. But as of now, because of how they've classified Bitcoin as an asset, you can literally sell it and then buy it back 1 minute later, and you can take a tax loss on it. I think that that's probably a loophole that the government gets rid of in the future, but as of now, it's still open. So there's kind of no reason not to take it, other than the fact that you incur transaction fees in doing so.
Fair. Pierre, just in general, abstracting out, like, how are you seeing the development of this Bitcoin only financial system? And do you think it's important to have Bitcoin only companies alongside like these, legacy companies that will be tacking on Bitcoin services? What would you say is the purpose or the goal of a Bitcoin only company in terms of influencing the broader financial industry?
Yeah, that's a great question. So it is, I think companies have a tremendous amount of path dependency in their founding DNA. And so a company that is founded on one premise is going to have tremendous difficulty in reinventing itself midstream to do something completely different. And so there is, on the surface level, people look at dollars and Bitcoin and they reduce it down to a ticker symbol, right? Okay, you got USD here, you got BTC here. If you've got a USD business like a bank, sure, why wouldn't you just have BTC right side by side with USD? The reality is that these are not only completely different technologies, One's proprietary, the other's open source. But they also just have completely different cultures. And so somebody who's got fiat brain and is trying to integrate Bitcoin into their business, they're going to mess it up. So you've got to have Bitcoiners, Bitcoin natives, building Bitcoin native companies and doing it from the founding moment, being Bitcoin only, and putting themselves on the correct trajectory, because course correcting after you launch the rocket is extremely difficult. And we've seen way more businesses go out of business than be able to course correct. For example, Blockbuster, they tried to do video streaming, right? How'd that go? Kodak, they tried to do digital cameras. How'd that go? So it's really important to get the DNA right from and we see that across the industry and also just across the economy. I'm very skeptical that incumbents will be able to build the best Bitcoin products. I think that it will be Bitcoin only challengers like Swan, like Unchained, like Casa, like many others that are laser focused on building the Bitcoin future.
I would like to add to that. I love that point. Also, that as Bitcoin native companies, that we should really shun what has happened traditionally in the financial system. I feel like we often say, "Oh, it's not important what's going on in standard financial system because it's Bitcoin's going to replace everything, and therefore everything in the financial system is going to go away." I think that there are a lot of things in the financial system that are going to go away. There's going to be a removal of a lot of the financialization that has happened in our society, which I think is a good thing for everybody. But I think, though, that there are certain aspects of the financial system that are there for a reason and that are not going to go away, and that it would actually behoove Bitcoin companies to identify what those are and be able to implement them in the companies that they're currently building. That way, you're on really a super trajectory towards what people want and need.
Yeah, and discerning between the two is that's where all the hard work is. If it was easy, then it would be easy, and there wouldn't be a great opportunity there. But the traditional financial system has built up a lot of tacit knowledge and built up kind of scar tissue from learning things the hard way. And so being able to bring that over, or Bitcoin only companies are going to learn these lessons the hard way all over again as well. So I think that's where, in terms of careers, it's a great career opportunity to leave the world of traditional finance and to join a Bitcoin only company, so that you can have that Bitcoiner DNA built into the company, and also bring in some of the more technical know-how of how do you run a financial institution in a responsible manner.
Yeah, absolutely. Swan's recently brought over 2 guys from Goldman and a guy from Bridgewater. So it's definitely happening, and very high level talent at those legacy institutions are looking to come over to Bitcoin companies. So that's definitely a massive opportunity for Bitcoin companies to hire the best that are out there and poach them from this legacy system. I want to dive into over-financialization. Morgan just brought it up, and I think both of you will be really good to help teach our audience about the harms of over-financialization and how it happened. And I don't know if you know some approximate numbers or whatever to describe the degree to which the economy has been financialized from 1971 to today. Either one of you can dive in on that. Would love to hear from both of you.
You want to start?
Sure. So what's the cause of over-financialization? It's inflation, really. It's you cannot hold cash on your balance sheet for the long term if that cash is fiat currency, because the issuers of that fiat currency have a policy view that they don't want you to hold it because they want to stimulate the economy, quote unquote, or that's what they claim to be kind of their benevolent reason for doing this. And so they print lots of money for themselves, by the way, which is interesting. And that causes inflation, right? And so it is inadvisable to hold large quantities of fiat currency on your balance sheet. And instead you have to
invest as quickly as possible or spend as quickly as possible. I see it really clearly in what I do for a living. So you can sort of see the evolution of financial advisory firms. It first started as a person who would pick stocks for you. And they would manage a total portfolio for you based on your needs and objectives and so forth, and pick individual companies that met those needs and objectives of the person. From there, though, right, that's a really time-consuming thing that for people to do and for individual people to be picking stocks constantly. So then these got packaged up into things like mutual funds and separately managed accounts, for instance. And we're seeing the meteoric rise, really, of index funds, where people literally, like, they need to move their money out of cash as quickly as possible, and they don't have time to even evaluate a mutual fund manager, and so they're just stuff it into an index fund because these mutual fund managers don't even have time to properly evaluate which company is going to outperform relative to another company in any kind of environment, just given what the government has done with our money. From there have been other products that have come out, like structured products, and notes come to mind, where they're packaging these things that are really risk assets into what's going to be a non-risk asset, quote unquote, because it's a bond. But instead, you've got this bond with caps on either side, so you're capping your downside and capping your upside, and then the financial institution is taking the risks. There's so many aspects of finance that have become more and more financialized as a result of just the government saying, we're going to go off the gold standard, and we're going to decide, what interest rates really should be. And it's kind of unfortunate, right? Because we're all humans. We all have flaws. We don't really know the future, any of us, really, at any given period of time. And yet we have left so much up to just a small group of people making these decisions that have had massive repercussions in the system on a whole.
Yeah, and the harms just go out from there. It's hard to really calculate and understand the offshoring of production, all of that, et cetera, because we're essentially have the dollar as our main export at this point. So what do you think about speaking of the small number of people who are making these decisions, just a quick take on the CPI print from yesterday and what you think the Fed might do, since that's what we have to do now, is predict what the Fed might do. That's all that's left.
Yeah,
if you jump in. Yeah, go ahead.
Yeah, when their mandate is really focused around consumer price inflation and full employment, and it seems like right now they're having to choose between the two. That is that consumer price inflation is out of control, and they've got to bring that in order to bring that back under control. They have to raise interest rates. Raising interest rates causes an economic contraction, unemployment, and so there's a trade-off between these two in their framework. The problem I think that they are encountering is that in order to bring down inflation, they have to raise interest rates to a higher level than inflation, so that investing in fixed income securities has a positive real rate of return, and that would suck up money out of the system and bring down consumer price inflation. So when consumer price inflation is 10% by their measurement, then the interest rate would have to be greater than 10%. So that is problematic because the economy price the stock market or governments is massively over leveraged, and so any increase in interest rates causes defaults, causes economic distress for a lot of different folks throughout the economy, and so they have to do this high wire act of, okay, do we let inflation get out of control, and then people are going to dump the dollar, or do we try to bring inflation under control but risk a deflationary outcome like they had with the 2008 financial crisis and kind of just a lot of economic damage and high unemployment? And that's the impossible situation they've placed themselves in. It's also not the first time they've done this. This is like we've seen this throughout the history of fiat financial systems, and I don't even mean like pure fiat since 1971. I also, under the umbrella of fiat, I would include kind of the paper gold financial systems when they had financial crises because they were using fractional reserve banking. And that is, a long history, both in the US and globally, of causing these booms and busts.
Yeah, for sure. I would add too that the other aspect that they're juggling is as the dollar becomes stronger abroad, it makes it much less likely that our global trading partners will want to buy things from us. And I think that if they're going to add that to the mix of raising interest rates and seeing a slowdown here and also a slowdown of exports abroad, it's going to be really, really difficult for them.
Yeah, so recession incoming. I mean, this stuff has a lag effect, obviously. So when you raise rates like this and aggressively like this, we probably won't see the effects, until 9 to 12 months down the road. And so
and
next year might be rough.
Even by kind of their existing research, like central bank research, like they say that the effect lag is 18 to 24 months. So, 1.5 to 2 years. And if you look at COVID, for example, that lines up pretty well, right? Mm-hmm. Which is that they printed lots of money in March of 2020, and it's only 18 to 24 months where everyone's like finally realizing, oh, here's the actual effects of this policy from 2 years ago.
Now I go to buy diapers for our daughter at Costco, and they're 33% more expensive.
Yeah, and they have to react in the short term because of all the political pressure. And the problem is that now we're going to see the effects of today's policy in 18 to 24 months. And it'll probably be, huge, massive economic damage. And then they'll have to print lots of money. And they're on this constant treadmill of trying to respond to the previous problem they created.
And it's just swinging harder and harder. It's almost like there's too much trust inherent in the system or required to run the system. So if we could find a way to trustlessly interact with one another economically, it might help society a lot. Just an idea.
I think that's potentially promising.
Well, yeah, it's how do you feel as a Bitcoiner, as an Austrian economist, about how everything playing out? I mean, Austrians have been predicting the crack up boom for a long time. Gold bugs have obviously been on board for similar reasons. And when you're in the midst of it, like right now, you feel like, okay, this is it. This is the one. It's happening. We felt like it in 2008. I remember having the same feeling. They keep kicking the can down the road, but these swings are getting crazier, like you were just mentioning. So, I hate to ask the question, but like, is this decade really the end of this particular fiat era? And do you think that Bitcoin will have something to do with, maybe pushing that to happen a little sooner than it might otherwise?
Yeah, I think.
Can I blow up your spot about when you thought hyper-Bitcoinization was going to happen?
No, you should. You should.
Yeah, okay.
I think that's correct. You should, because I was gonna accuse myself of it.
Yeah, 2013, Pierre and I started dating, and Pierre thought hyper-Bitcoinization was happening when we had that little Cyprus bubble at the beginning of 2013. It was
right,
and there was the Cyprus bank people who had their deposits in the bank took a small haircut on their holdings. Basically, I mean, it's not small; it was a good 10 to 15% haircut on what they held there, and Bitcoin ran up. Pierre definitely was like, "It's happening."
We're on pause. Let's go.
I think one of the problems with these predictions is that we all think, and I guess also why I liked like Parker Lewis's title to his series is Gradually Then Suddenly, because things that feel like they might be sudden actually are quite gradual, and when it actually is sudden, I think even Bitcoiners might even be surprised by how sudden it is.
I over the past decade, one of the most important lessons I've learned is that of humility, that I don't know how to time the market. It's a very complex economy. And that's the same problem that that I accuse central planners of having, right? And so it's really hubris for me to think that I'm smarter than central planner. But what we do know is the fundamentals of Bitcoin. And I think that's really what I keep coming back to, is that even though I don't know what's going to happen with the economy, the value of Bitcoin is the certainty that it has on a systemic level of how does the network function, how does the code work, and that is what I'm using to hedge against the uncertainty of all these centralized systems. And so that's the value of decentralization, is to hedge against centralization. And for me to predict what's going to happen to the centralized systems, that is the hubris of a central planner. But to predict what's going to happen with Bitcoin, well, that's just looking at the code, right? That's just doing the math, running the numbers.
Yeah.
There's going to be a halving every 210,000 blocks. It's not, me playing central planner. That's what's baked into the code, and so forth. That's where we can have the certainty of Bitcoin, and then not really have a strong opinion about what's going to happen outside of Bitcoin, because that's exactly why we're interested in Bitcoin, is because we don't know what's going to happen outside of Bitcoin.
Yeah, I just want to circle back on the volatility point I made earlier. It's one of these things I do like to discuss with clients, is that we actually have a lot of volatility in our day-to-day lives right now that we don't really see, right? Because when we think of $1 going into a bank account and that's still $1 in that bank account, you don't think of the loss of purchasing power that you've experienced over the last, 2, 5, 8, 10, 15 years. And so because you can't see it, it doesn't feel volatile, and it doesn't feel like something you have to hedge against. But if you do look at it over a long period of time, then it is something that you want to hedge against. And it just seems to me that given all of the uncertainty that is out there, why wouldn't you want to have a hedge where you had monetary certainty against the backdrop of all of this monetary uncertainty and all of these, like everything in the financial system that's completely outside of our control?
So we're in a bear market, I think. It's confirmed at this point. You guys have been through several, and I know we have a lot of people listening now and who will listen to this when they download that this is their first bear market. And I'm really proud of the client base at Swan, because they've really strong hodlers who have come to understand, if they didn't already, understand the importance of stacking right now. This is where, your stack is going to be made. You're never going to get a better chance to, increase the size of your stack than you are right now. So what is some advice you might have for Bitcoiners beyond just stack sats in a bear market, because it's cheap? From your experience, I'll start with you, Morgan. Like, what would you advise some clients to do during a bear market? Maybe if they haven't, reached that level of conviction yet, they're feeling a little nervous, it's their first bear market. What would you say?
Yeah, so I would want to approach it like we approach any other asset class, and where we do rebalancing in the portfolio. So if since Bitcoin has dropped, right, maybe you originally took a 5% position or something like that in your portfolio. Now you're looking at a 3 or 2% position, depending on when you got in, right? You would want to try to get back to that 5% position. What I recommend that people do, though, relative to their risk tolerance, and I'm just using that 5% number as a number, right? Maybe you're at 40% or 90% or whatever it is. When you are looking at that, though, right, you have to calculate how much it would be to get you back to that level in the portfolio that you originally intended to have. Would be the first thing. And then you have to decide whether or not that's an appropriate allocation for you, right? Because I think sometimes we get lost in the numbers. We just think, oh, percentage, and it needs to be this specific percentage of our portfolio. But if you are feeling really nervous in a bear market, it actually might be better to look at it in dollar values rather than in percentage terms, and just committing to a certain dollar amount of rebalancing back and being like, okay, throughout this bear market, I know I'm going to commit a certain dollar amount, and I'm going to stick to that dollar amount, and that's how much I'm going to put in, and that'll be my quote unquote cost basis, and I feel comfortable with that value, instead of just kind of evaluating it on on more of a rotating percentage basis.
How about you, Pierre? Any advice for?
Yeah, I think something that I've heard folks bring up is that they want to lower their average cost, and so I think that's also a fine way of looking at it. I still think that's a bit of a mental bias, a cognitive bias of looking at the average cost, because I think you should be looking at how many millions of sats do you have stacking up. The other thing, though, is that you should expect that in a bear market, you're going to lose interest in Bitcoin. Not that you're going to become bearish on it, or that you are going to, repudiate it or rage quit, but just that you're naturally going to be less interested in it than you were in the bull market when you had green candles every day. So I think that that's really where there's tremendous value in setting up a recurring buy at Swan, at anywhere else, so that you, even when you do lose interest in it, you're still stacking. And putting that on autopilot, and look, like, yeah, go out, go enjoy your hobbies, right? Go do some gardening, so that you're not thinking about Bitcoin all day or staring at a price chart, but automate your finances, because then in the bull market, if you don't do that, you're going to be kicking yourself in the butt of, oh, I should have been buying when Bitcoin was at $19,000 or whatever, and having regrets. So I think that setting up a recurring buy during the bear market is critical, so that you can come out of the bear market with a much better stack.
Yeah, I love that. The last thing I would add would be, if you haven't already done this, you should do this anyways, but it also helps with bear markets, is throwing your coins on cold storage. If they're not like in some sort of account where you're checking it all the time, or if you're like, or if you're just going to look at the price and then you're multiplying out how many coins you have, right? At the very least, if you get them off onto cold storage, you're not putting yourself in a position every time you log in somewhere where you could see how much value you have or have lost over time. So automating as much as you can, and then also throwing it in cold storage, which is a good practice anyways. You should be not holding your keys on exchange and so forth.
Yeah, because I mean, as you mentioned earlier, like, Bitcoin is long-term savings. So you should not put your long-term savings in a short-term trading account, right? It's just not adapted for that.
One other interesting thing I've seen during this bear market is that the institutions, legacy financial institutions, don't seem to be too scared about what's happening with Bitcoin's price right now. And they seem to be making moves to be ready for when price brings attention back to the asset class. And I think we just heard Fidelity, was it? Fidelity is announced something, I can't remember, with the retail brokerage and making Bitcoin accessible to, I don't know, tens of millions of accounts, maybe 30 some, I think, if I remember correctly. And then Franklin Templeton as well. Have you been watching these moves, Pierre? And do they mean anything beyond more and larger, wider on-ramps to Bitcoin when price brings attention back?
Yeah, I mean, first of all, they're very late to the party. I mean, Origin Wealth Advisors had Bitcoin as part of their offering a long time ago. So
That's true.
Clearly, Morgan's firm is a leader in the industry and way ahead of the curve. The other point is that they probably started this process during the bull market of, hey, we should do more, with Bitcoin, give more access to Bitcoin. And because these firms are so slow, it's, a year or two or three later that they are actually announcing, hey, we've finished integrating this.
That's a good point.
So the third is, unlike Origin Wealth Advisors, that
we turn on a dime.
Yes, exactly. Mm-hmm. And the third point is that the reason they didn't pull the plug when they saw the bear market developing is because I think it's widely understood that Bitcoin adoption now happens in waves. And so you have waves of adoption on Bitcoin because humans are social animals, right? We have this herd mentality of everyone tries to buy at the same time. I started my career out at Target. I was on the ground floor of the retail industry at Target. And I thought, I remember during my training, they were like, hey, this is kind of weird, but people check out in waves. So they come in at a constant rate and then they check out in waves. And so we'll have to call up people to come help out, to ring people up. And so that's why we can't just have a constant number of people at the front, So I've seen it and that was entirely correct, right? And why do people check out of Target in waves? There's no rational reason for them to do it other than they're sheep, right? So they'll see somebody start to check out and they're like, oh, they'll check their watch and like, oh, I should as well. And
I feel offended.
Yeah, well, it causes the boom and bust cycle of the Target
checking
line.
out.
Yeah.
That line's getting long. It's just going to get longer. I better get in there now.
Yeah, FOMO in. So yeah, humans are like this, and they're like this for everything, including Bitcoin. And so these firms, their view is that Bitcoin adoption has not reached a ceiling, right? Bitcoin has not reached 100% of the total population of people that would be interested in Bitcoin. Because you might think, okay, well, what's the total population? Let's say, in the US, 300 million people, 400 million people. What percentage of them should be using Bitcoin, right? Or what percentage would benefit from using Bitcoin? I'd argue 100%, right? And I think that a lot of people who are in the industry agree. And it's only the no coiners that are like, no, this is a speculative gamble that is only interesting to like a marginal 5% of the population. And so if the view is adoption happens in waves and we are very early in the adoption process, then it makes sense to launch a product, even if it's the bear market, even if everyone thinks that, Bitcoin's over and the fad has passed. And so I think that's what we're seeing with Fidelity and others as well.
I imagine also we'll see, similar to Fidelity and Templeton, and after the next wave, 18 to 24 months later, other products being released by large institutions.
Yeah.
Curious about how you manage your own personal finances. Are you on a SAT standard, or do you guys? Yeah.
Let me read to you our 12 words here, so that you can just kind of get a good look at
so we can
how we do
contribute to the
things
college fund.
Yeah.
Here at the Rochard household.
Yeah.
It's really so. I think this is universally true. Is that rather than buying Bitcoin based on the price chart, you should buy and sell Bitcoin based on your personal finances.
Mm-hmm.
So if you have net positive cash flow, and you know that you're going to be able to have this capital for the long term, then put it into Bitcoin. If you have short-term cash needs because you've got negative cash flow, you got to sell your Bitcoin. Like there's no, or some might argue borrow against it. Lots of different factors in that decision.
Mm-hmm.
But that's what it comes down to. Not is the price going up or down. It's what is your current financial situation? What's your income? What's your balance sheet?
Yeah, so I would say like we have financial meetings in our household, and I encourage couples in my practice to do that. And typically they have those with us, right, at the financial planning firm that I run. But if you don't work with a planner, you should be running meetings, I would say at least quarterly. That way everyone knows what's coming in, what's going out. If you are living in a world where you take in fiat and your expenses are all in fiat, then yeah, your income statement should also be in fiat, right? Because otherwise you're just going to start converting things and it's not really going to make any sense, right? So at the very least, your income statement should be in fiat. Your balance sheet, you could decide either way, right? You can run it in fiat. You can also run it in sats. You can have a sat standard in that regard. But everyone in the household should be on the same page. If you're single, you should be doing this with yourself. I think it's a lot harder to get motivated to do this with yourself, but it is still important to be looking at your finances on a quarterly basis. And at the very least, right, if you know what's coming in and what's going out on a monthly, quarterly, annual basis, then you're going to be able to stack more sats, right? Because you're what's coming in and out, and therefore so I find that to be like really helpful in our household. And then it'll help you, having just sort of the basic knowledge of what's going on with your financial system will help you make all the other decisions around your finances that need to be made for your specific situation.
And you can't get started soon enough, right? Because I did not manage my finances at all, basically. Like I didn't have a budget through college. I was in the Peace Corps, so I didn't really need one. And then when I got back, same thing. And I didn't really get serious about managing money until, I got engaged, and my wife worked at a bank branch all through college. And so fortunately she kicked my butt into gear in that regard. And it's amazing when you look back at how much money you just threw away just because you didn't take the time to understand like what was coming in, what was going out, etc. So
I would also say kind of like like the fiat system today, right? How where we have money coming in and we either need to spend it immediately or invest it immediately, right? You kind of have the other impulse now in a Bitcoin world where you now have more incentives to work on your personal finance with urgency,
Right. Yes.
but less urgency to actually spend that money or get it invested, quote unquote, in standard assets rather than just buying something like Bitcoin. So I feel like it's actually now like having Bitcoin has now flipped that more towards the plebes, right? More towards the regular people who just want to do the right thing for their finances.
Yeah, and that subtle shift in the incentive layer, like I mean, at the base of all these, money decisions, can have a big cumulative effect, which we've, I think, all discussed in various parts of our Bitcoin journeys. But it's can change society. So this has been great. Let's move over to Spaces, and I want to talk about Lightning there, and I want to talk about Riot and mining as well, which we didn't get to on this portion of the show. And we'll see if anybody else has some questions for us. So I'll let you two hop over there, and I'll close this out and be over there in just a moment. Okay, thanks for joining us for the video YouTube portion of the show. We're going to head over to Spaces now. If you're watching on YouTube, at Swan Bitcoin is the handle hosting the Twitter space. And we'll have Pierre and Morgan there, and we can talk a little bit more with them in a more of a kind of a Q&A discussion atmosphere. So if you have questions, or if you don't yet, you can think of a question, and I'll be over there in just a couple of minutes to ask those questions for you to ask those questions of Pierre and Morgan. Again, Pacific Bitcoin. It's going to be a massive event. Sailor yesterday on a space hosted by Swan and Cafe Bitcoin said that the event looks like it's going to be the event of the year. So he's really excited about what's shaping up with Pacific Bitcoin, and we are as well. Morgan and Pierre will both be there and speaking amongst 70 or so other Bitcoiners who are many of the best in the business, your favorite people to hear from, plus a lot of the plebs who will be in the Swan Dome doing various fun things like we do on Bitcoin Twitter every day. So you'll definitely have to come and check us out. Join us. The environment's going to be amazing. A couple thousand people, big enough for a lot of great crowd energy, but small enough to be able to meet everyone that you really want to meet at the conference. And that's why we all fly out to be in person together, is to meet everyone and spend some time in the real world with one another. So come on out, network, meet your Bitcoin Twitter friends. It's going to be a lot of fun. You will not regret it. PacificBitcoin.com. You can get 30% off of your tickets with code SWAN, SWAN, code SWAN at PacificBitcoin.com. Grab those 30% off tickets right now. They're only going up. So please grab them now. Come join us for the inaugural Pacific Bitcoin Conference. I'll see you guys over on Twitter Spaces. Thanks.